Let's talk about debit and credit. First, remember this. Debit and credit are not good or bad. They're just words accountants use to explain the double-sided nature of financial transactions. Every financial transaction has two sides, a source and a destination. Think of it like money flowing from one place to another. Credit is the source, and debit is the destination. Think of assets like cash, buildings, or equipment. These are things the company owns. Expenses are payments to third parties for services, like rent or electricity. Dividends are distributions of cash earned, given back to the owners. On the credit side, equity is the money owners invest into the business. Liabilities are amounts owed to banks or suppliers. And revenue is the income generated from business activities. Debit shows where the value goes, and credit shows where the value comes from. Together, they balance every financial transaction and keep the accounts accurate. So the next time you hear debit and credit, don't think of them as positive or negative. Just remember, it's all about the flow of money, from a source to a destination. Thank you for watching, and I'll see you in the next video.